Muhammad Nizam Alias issued a statement today saying that he has yet to receive any formal notice from Prasarana Malaysia in regards to his termination as CEO and President. In a Malaysia Kini article citing the statement, Muhammad Nizam also urged Chairman and Pasir Salah MP Datuk Seri Tajuddin Abdul Rahman to recuse himself from the deliberations by Prasarana's board concerning his case. The Edge Weekly had previously reported that Muhammad Nizam had been served a show-cause letter which indicated that he had showed signs of insubordination when requested to investigate MRCB George Kent, the JV behind the LRT3 project. He had been suspended on December 10th, 2020. Muhammad Nizam says that on January 22nd, 2021, the allegations were dropped and he was accused of being somewhat impolite to the non-executive chairperson on a particular occasion. He says that as far as he knows, the board has not made any decision to terminate his services. Muhammad Nizam goes on to say that the chairperson is conflicted from participation in the inquiry as the allegations stem from him. He adds that no one should be a judge of their own cause. Muhammad Nizam believes that Tajuddin was trying to pressure the board into making a decision after Tajuddin had announced at a press conference on March 10th that the Prasarana chief had departed from the company. The Energy Commission has announced the list of 30 shortlisted bidders for the large-scale solar at Mentari, totaling 823.06 megawatts out of the offered 1,000. This comprises 20 companies covering 323.06 megawatts under package P1 at between 10 and below 30 megawatts. The remaining 500 megawatts is split between 10 companies under package P2 between 30 and 50 megawatts. The shortlisted bids for P1 range between 18.5 cent per kilowatt hour and 24.81 cent per kilowatt hour. Meanwhile, for P2, the bids ranged between 17.68 and 19.7 cent per kilowatt hour. Among the listed companies that have been awarded the projects include Solarvest Holdings, MK Land Holdings, Kupulan Powernet, Ranhill Utilities and the Naga Nasional. Cheetah Holdings, XOX and Lambo Group have entered into a tripartite collaboration to launch an online apparel store by April 2021. It will be called the Cheetah Online Store. Under the collaboration led by XOX, Cheetah will revamp its apparel brands focusing on online business and the youth market, the company said in a joint statement. Cheetah brings with it its 4 major brand silos and 5 sub-brands, while XOX will lend its 2 million strong customer base, its dealer network and its e-wallet platform. Lambo Group's contribution will be its machine learning model and last mile delivery. XOX CEO Ng Kok Heng said in the statement that this concerted effort represents a turnkey solution to providing all three with an immediate boost to revenue, product and presence. Cheetah already has an official online store, while Lambo Group operates Lambo Place, with products ranging from retail goods to fresh produce. Oil giant Shell has decided to explore its options to divest its non-operated interests in selected assets located in offshore Sarawak, according to Bernama. The interests are in the amended 2011 Baram Delta EOR production sharing contract and the SK307 PSC. The assets are operated by Petronas Charikali and Sarawak Shell is a non-operating partner. In a statement, Shell said the decision is in line with the group's strategy for its upstream business to become more focused. The British-Dutch oil player says Malaysia remains an important country with a continued strong presence in its upstream, gas to liquid, downstream and business operations sectors. It notes that the upstream business in Malaysia had been identified as one of Shell Upstream's 9 core performance units worldwide. Supercompnet Technology saw its fourth quarter FY20 net profit jump 62% year-on-year to 7.38 million on improved margins and better revenue recognition. Its PAT margin increased to 19.3% from 14% a year earlier. Revenue grew 18.4% to 38.3 million from 32.4 million the year before. Supercompnet specializes in making wires and cables for medical devices. For the full FY20, profit rose 16.5% 6.5% to 22.6 million from 19.38 million a year ago, while revenue improved 4.42% to 128.4 million. According to its notes to the bourse, the group is expecting its prospects to improve, with management saying they are cautiously optimistic.